Hello everyone, my name is Anisya Putri Rahma Wati NPM 2341205 Class Accounting 23A. Here I will explain about understanding financial statement analysis. Financial statements are important documents that reflect a company's financial condition. There are three main statements that need to be understood. First, the income statement, which shows the company's revenue, expenses, and net profit. Second, the balance sheet, which shows the company's assets, liabilities, and equity. Third, the cash flow statement, which describes how money comes in and out of the company. To analyze financial statements, there are several techniques that can be used. One of them is financial ratio analysis, which includes several important ratios. Liquidity ratio measures a company's ability to pay short-term obligations. Profitability ratio shows how effectively a company generates profits. Solvency ratio describes the company's capital structure and debt level. Meanwhile, activity ratio measures the efficiency of asset management in business operations. In addition to financial ratios, there is trend analysis, which is a method used to see patterns of changes in financial statements over several periods, in order to identify growth or decline in company performance. Another technique is comparative analysis, benchmarking, which is done by comparing a company's financial statements with similar companies or industry averages to assess its competitiveness. Through financial statement analysis, we can understand the financial health of a company and make better business decisions. Therefore, it is important to read and interpret the data carefully and compare the results of the analysis with the company's targets. By understanding financial statements well, we can develop more effective and sustainable financial strategies. In addition to understanding the basics of financial statement analysis, it is also important to know how to apply it in decision-making. One commonly used method is horizontal and vertical analysis. Horizontal analysis compares financial statements over multiple years to identify trends in growth or decline. Vertical analysis compares each component in the financial statement to total assets or revenue, allowing us to see the proportion of each element. It is also essential to understand cash flow performance, which is divided into three main activities. 1. Operating cash flow, showing how well a company generates cash from its core operations. 2. Investing cash flow, reflecting the use of funds for long-term assets. 3. Financing cash flow, describing how a company obtains and utilizes funding, whether from debt or equity. By applying these analytical methods, we can assess whether a company is in good financial health, experiencing growth, or facing financial risks. Understanding financial statements in depth will help in making wiser and more strategic business decisions.